Yastine for Total Wealth Insider. And if you're looking for the best place to invest in 2018, to me, one of the best bets that you can do is to basically put on your investment banker's hat and bet on M&A, mergers and acquisitions. The biggest deal that we saw last year was the Disney 21st Century Fox asset buy. That was for $52 billion. And I think that's really just the beginning. Tax reform is a key piece of all this. It promises to free up billions of dollars in corporate cash that's held in overseas accounts. It lowers corporate tax rates. And many companies, since they have their stocks at all-time highs, they can use their stock as a type of currency to pay for deals as well. The attitude of American consumers is another component. Consumer spending hit a one-month record late last year that we hadn't seen since 2009, when the U.S. economy was really just beginning to emerge from recession. But the key element is what I call corporate sentiment. In other words, CEOs and their boards of directors, they're the ones that decide how a company spends its excess cash, and they go through their own cycles of optimism and pessimism. And we see that swing to optimism recently with a Deloitte survey that they did of 1,000 corporate executives and private equity firms. A rising number of those surveyed, about 2/3, say that their cash reserves increased last year and that the primary intended use of that cash is for M&A deals. In recent years, that wasn't always the case. Companies really wanted to grow organically. They wanted to grow their investments from the inside out. They didn't want to buy them. They didn't want to go outside the company to get them. So about 2/3 of the companies say that they anticipate the average size of the M&A transactions that they expect to do in the next 12 months will exceed those in the past year. Again, that points to a lot of optimism on the part of CEOs and corporate boards. Now, we've already seen a step up in M&A activity. In November, the Dealogics analytics firm said that November was the second largest M&A month that they had ever seen since they started keeping records on all this in 1995. And I know that even in my newsletter, Total Wealth Insider, out of the stocks that I have in my model portfolio, we already saw one significant gain from a buyout. And there's about 1/3 of the companies in it that are either rumored for acquisition or they have activist shareholders who are pushing senior managers to do just that. So does that mean that you should just go out and buy a stock that maybe you read about somewhere as a possible buyout candidate? I say no, of course. What you really want to do is buy good companies that are undervalued. And that's what we do at Total Wealth Insider. And I think that subscribers have been very happy with the results, and that's really whether our stocks get bought out or not. So I'll leave it at that. But if you like what I'm talking about here, please subscribe to our page. Make sure you like this video and keep up with our latest insights. I'm Jeff Yastine for Total Wealth Insider.